Thank you. Good afternoon, everyone, and a warm welcome to Dr. Lal Pathlabs Q4 and FY20 earnings conference call. Joining us today are senior members of the management team, including Honorary Brigadier Dr. Arvind Lal, Executive Chairman, Dr. Om Prakash Manchanda, Managing Director, Mr. Bharat, CEO, Mr. Ved Prakash Goel, CFO, and Mr. Rajat Kalra, Company Secretary and Head of Investor Relations. Before we commence the call, I would like to underline that some of the statements made on the call today could be forward-looking in nature, and the actual results may vary from these forward-looking statements. A detailed disclosure in this regard is available in the results presentation, which has been circulated to you earlier. I would now like to request Dr. Lal to share his perspectives with you. Thank you, and over to you, sir.
Good afternoon to all, and thank you for joining us on today's call. I will be sharing my thoughts on the key developments during the quarter and give a broad color on the outlook. The world over, we are grappling with defeating a common enemy in the form of COVID-19, which has taken the shape of a global pandemic. The quarter gone by was marked by a decline in volume due to the impact of nationwide lockdown starting second half of March to contain the spread of COVID-19. While we continue to experience some adverse impact of lockdown on the business in Q1 FY21 as well, however, we believe this to be a transient effect and expect to return to normalcy once the economic activities start post-lockdown given the inherent nature of our services. You may be aware that we were one of the first private laboratories in India that has got approval to commence testing for COVID-19. Currently, we have approvals for 3 labs, which are the National Reference Lab at Delhi, the Regional Reference Lab at Kolkata, and Central Lab in Indore. We are closely working with the state governments to meet their testing requirements. This unforeseen pandemic will bring in sharp focus on communicable diseases in time to come, and it is also exposed that India is underserved in the healthcare sector. Therefore, current situation highlights vast scope of growth in healthcare, particularly in diagnostics. Our performance during the first 9 months of the fiscal year reflects our well-considered approach of blending organic growth with pursuing strategic opportunities in West and South regions to build out testing and patient collection infrastructure. We are also continuously working on providing an improved user experience to the patients by leveraging technology. This is in addition to our efforts towards widening our test menu and geographic presence. Our hub and spoke operating model has successfully demonstrated scale benefits in the past, and I continue to believe that this will help us in further expanding our penetration in the diagnostics industry. With that, I would like to hand over to Dr. Om Manchanda to share his thoughts and updates on the operational performance. Om.
Thank you, Dr. Lal, and good afternoon to everyone on this call today. As pointed out by Dr. Lal, this quarter was a challenging one for us due to COVID-19 pandemic, especially towards its end, that is in March 2020, and the challenge still continues. While we have undertaken a host of initiatives to partially offset this impact, the resultant impact on our financial performance is evident. We are certain that the adverse impact on our operations will not be too prolonged, given that we offer an essential service and that our momentum will return gradually as the lockdown gets eased. Our revenue for the quarter came in at 301.7 crore for the full year ended March 31, 2020. The revenue stood at rupees 1330.4 crores, growing by 10.6% compared to last year. We served 4.4 million patients in Q4 FY20, an increase of 2.1% as compared to Q4 last year. In FY20, we served 19.4 million patients, an increase of 10.3%. While we have been driving sample volumes through network expansion and bundle tests, the overall performance has to be seen in light of COVID-19 impact and subsequent lockdown. In terms of COVID-19 testing, we are drawing samples and conducting the test in complete compliance with patient and sample management protocols as laid out by ICMR, and other government bodies. The data is being shared on an almost real-time basis with the government authorities. We are currently testing for COVID-19 at our National Reference Lab in Delhi, Kolkata Reference Lab, and Central Lab Indore. The COVID-19 outbreak has significantly impacted sample flow in the non-COVID segment, and Dr. Lal Pathlabs continue to keep its infrastructure of labs and collection centers open as much as possible. We are carefully analyzing likely patient behavior post the lockdown and accordingly making changes in various processes related to patient handling. Dr. Lal Pathlabs continues to drive volumes by expanding the reach in rest of India market through cluster approach. And during the quarter under review, contribution from rest of India stood at 60% as against 58% last year. Our attempt has always been to increase the productivity by driving scale and keeping costs under control. Given our strong presence in the Delhi NCR region, our focus has been on growing the rest of India contribution in a calibrated manner, which will be crucial for us to maintain margins. We have also been acquiring smaller but high-quality local labs in the west and south regions of India to grow our presence in lesser tapped regions of the country, that is beyond north and east. Technology is an integral part of our operations, and we are continuously trying to strengthen our digital presence and further developing the app with greater functionality and customization. Our online experience thus far has been encouraging, and our ability to integrate technology into our service offering is what gives us a significant edge over competition. Our mission is to provide the best possible diagnostic services to our patients conveniently and at reasonable prices by leveraging technology and widening the test menu. With that in mind, it is our duty and responsibility to enhance the quality of healthcare and to provide value to all our stakeholders. With that, I conclude my opening comments and would now request Ved to give an update on the financial performance of the company. Ved.
Thank you all, and a very good afternoon to everyone present on this call. I will now share with you some of the financial highlights. Revenue for Q4 FY20 is at rupees 301.7 crore as compared to rupees 301.1 crore in the same quarter last year. For the full year FY20, revenue came at rupees 1330.4 crore, a growth of 10.6% over FY19. Realization per patient for the year FY20 stood at rupees 686 as against rupees 685 in FY19. Normalized EBITDA for Q4 FY20 came in at rupees 55.5 crore as compared to rupees 72.9 crore reported in the same quarter last year. Normalized EBITDA for FY20 came in at rupees 331.1 crore, a growth of 5.7% over FY19. PBT for Q4 FY20 is at rupees 45.4 crore as against rupees 69.2 crore in the same quarter last year. PBT for the year FY20 came in at rupees 310.5 crore, a growth of 3.3% over FY19. PAT for the quarter 4 FY20 is at rupees 32.6 crore as against 47.4 crore in the same quarter last year. And for the FY20 full year, the PAT came in at rupees 227.6 crore, a growth of 13.5% over FY19. Cash, FD and investment in mutual funds stood at rupees 744.3 crore as at March 31st, 2020. Basic EPS for the quarter 4 FY20 was rupees 3.94 per share. For the full year, basic EPS stood at rupees 27.42 per share. That brings me to the conclusion of my opening remarks, and I would now request the moderator to open the forum for question and answer. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. The first question is from the line of Chandramouli from Goldman Sachs. Please go ahead.
Hi, good evening, and thank you for taking my questions. First question is related to the opening remarks that you had made. We've seen only a mildly similar shock in the past post-listing for you, which is demonetization, and demand there seemed to come back in a couple of quarters. When you contrast the current experience with that shock, based on data and trends that you're seeing, how many quarters would you think that it might take for demand in this situation to come back to sort of normalized levels? Any color there would be really helpful.
Yeah, I think that's a good question. While we are seeing encouraging improvement in the sales over the last 5-6 weeks of lockdown, but it's definitely not come back to what we used to be. We are significantly down compared to last year. But my sense is once the lockdown gets relaxed and overall lockdown 4 has certain relaxation in green zones, etc., definitely demand will come back. But it's very, very difficult to actually say as to when will we come back to normal level because of strategy adopted during this lockdown by various states is actually varying. We were hoping that from today onwards, lockdown relaxations will be much, much more, but we haven't seen that yet. So I do believe that, I do believe that we'll come back to normal. It's very difficult right now to say as to how much time it will take, but my sense is that it will be a big function of relaxing various restrictions that exist today in key states, especially in northern and eastern part of India.
Got it. That's helpful. Second question, Ved, is on the gross margin. So, looks like for the last couple of quarters, gross margin is down in excess of 100 basis points. Is this a function of maybe the INR weakness and some of the contracts that you have with your suppliers, or is it a function of maybe softer volumes than expected in recent quarters? If you could give us some color on the gross margin, please.
See, in gross margin is, if you are talking about this quarter, especially because of, lower sale, and that's where consumption is slightly higher because of, on scale of low volume, obviously the consumption tends to grow up. So that's the reason where you see that gross margin is looking lower. But otherwise, if we on a steady state, our gross margin is quite stable.
I think one variable that we see is clearly it's very sensitive to scale. As the scale went down very sharply in the last fortnight of March, we saw some impact. But having said that, I also must say that as a contribution of high-end test grows, while the revenue per patient from high-end test is high, but relatively these kind of tests tend to have lower gross margin compared to, let's say, a routine test. But their EBITDA margin is very similar because servicing cost of a high-end test is much, much lower than a routine test because most of the high-end tests tend to be B2B in nature. So that also tends to make a difference at a gross margin level.
Got it. That's helpful. Just last question is, I understand you do not usually comment on monthly trends, but these seem to be very, very different times, and there are a lot of numbers doing the rounds that healthcare services companies are seeing in excess of 70-80% sort of YOY declines in April and May. So if you could just give us some directional commentary on what trends you've been seeing in April and May, that'd be really helpful. Thank you.
Yeah, I know it's. I do not want to put a figure onto this because we are in such a dynamic world where virtually these numbers on day-to-day basis are changing. But there are 2-3 things I want to tell you. One is that we are looking at business as a COVID and non-COVID because there is some COVID testing which is flowing in. and that is very highly volatile in nature because one day you get large number of samples, the next day you don't get it. So we are very clearly focused on reviving non-COVID business because we know that COVID business is a temporary opportunity. It also exists primarily right now more on the top line because we are uncertain right now and unsure as to whether it will have any positive impact on the bottom line at all because lots of unforeseen expenses are becoming more and more visible on the COVID side of business. But if I were to just take only non-COVID, which is our original parent business, we are seeing a very encouraging improvement week after week. We are still nowhere close to where we would like it to be. But all I can say is that what happened in the first week of lockdown and where we are now, there is a significant jump in the business as of today.
Got it. Thank you very much and all the best.
Thank you. The next question is on the line of Nikhil Mathur from Ambit Capital. Please go ahead.
Yeah, hi sir. Good afternoon. My first question is on, so if what we have seen in your pricing profile over the last 2-3 years is that there hasn't been any kind of pricing hikes that have been undertaken either by Dr. Lal or some other players, the larger players in the market. Now, does it offer some room for you to increase prices in FY21 given that there's possibly more income at disposal for many of your clientele in metro cities and possibly the competition is also a bit weaker. So can you offset some bit of pressure in FY21 by taking some bit of price hikes in FY21?
My sense is there's so much of adverse impact on the economy. I'm not sure whether we would like to take that route or market will be able to absorb it. So I think immediate reaction to your question would be it will be difficult to make up through a price increase some shortfall that we expect in the year.
Okay.
But we also believe that as the lockdown opens up, there is a pent-up demand which will come out because see, our demand is not a function of private OPDs, and during lockdown these OPDs have actually come down drastically. But I think with every lockdown, there's a relaxation happening on the medical movement. So we do believe that we should quickly come back to a reasonably good level of number compared to last year within the next 2 to 3 months.
Okay. And so also the compliance cost in terms of protecting your employees or in general how collection will happen, how your facilities will operate. Surely there would have been some jump in compliance costs in procuring these kind of or deploying these kind of safety measures. Can that really have a bearing on your margins in FY21 from this standpoint?
I think it's a great question. We do believe that post-lockdown, there's a likelihood of a change in consumer behavior. One clear behavioral change which is going to be there for all of us, which is going to impact all the industries, is social distancing norms. And there's also likely for some time to come a hesitation for people to walk into a retail facility. We do believe that we'll have to take some measures to counter that. I do believe that home collection segment will tend to grow. I also do believe that digital initiatives where people would like to book online, pay online, and maybe come only for just giving blood sample rather than staying longer in the walk-in area. So that also may happen. We also may have to spend some money on protecting our own employees, which we have already started doing. So you are absolutely right that some amount of precautions will need to be taken to keep both patient as well as employee safety. Or at cost basis, at some places we have started building into that cost because let's say, for example, we are not allowing anybody to walk into our facility without a mask. So we are actually communicating to all our customers that they should come with the mask. And if they don't bring masks, then we probably are giving a facility of picking up one from our outlet and pay for it. So all those costs, as much as possible, we are trying to recover. And let's hope that we significantly don't increase the cost of operation. But it's very difficult right now to estimate that what the cost of operation is going to be. But I do believe that it's not going to be that significant that we are resorting ourselves to take a price increase. Maybe Ved may want to add something more to it.
So you are right. I think, Nikhil, that cost of operation is going to go up, as explained by Dr. Om also. But at the same time, we are looking and, doing how we can, change our model so that we can optimize the cost. So a lot of costs, which is in normal cost, we are, spending, that might not be required, or maybe, we can optimize those. So it's bit balancing the whole thing where in some area the cost will go up, but at the same time we can also save some cost by optimizing some of these operations or some of these processes where we generally spend amount.
But on the revenue side, it can also throw up opportunity because consumers will feel more confident in coming to an organized branded player than a small player because they believe that safety measures are much better here.
Sure, sir. And if I may just ask one more question. So are there any packages that are being worked out from a strategic standpoint? So what we understand is that comorbidity is a very large issue if a patient has some comorbidities and he or she gets impacted by COVID. So are there any health risk assessment kind of packages that Dr. Lal is willing to launch wherein there's a set of tests that will be undertaken by a patient and he or she can get to know his risk profile and in general try to be lead a more healthy lifestyle?
Dr. Lal, if I can answer this question, the thing is that right now it is the peak of COVID-19 infection, and the comorbidities right now are interconnected with people slightly in the older age group who are going for other kind of chemotherapy or who are going for a elective surgery or a cardiac stenting or things like that. So those are the ones which are actually looking you in the eye. And with that, you do not have, if you have comorbidity, if you are infected with COVID-19, then the outlook is slightly, bad. Coming to people like us, we have to wait for this initial peak to subside, as you say that if the curve gets down. And then, of course, there's the number of packages which we can, take out in no time. But at that point of time, there will be testing for the COVID-19, but hopefully for the antibody segment to find out if there is any, immunity created in this person or not. But that will take time. Right now, the government has not announced those plans for people like us to do the antibody testing along with comorbidity conditions. Thank you.
Sure, sir. Thanks a lot.
Thank you. The next question is from the line of Harish Krishnan from Kotak Mutual Fund. Please go ahead.
Hi, Doctor. Actually, my question was related to the antibody testing opportunity. Like you mentioned, the government has not allowed it. But could you give a sense as to how large the opportunity is, the scale of investments that may be needed, and how are we looking at this as an opportunity? Is it too institutionalized that we may not participate? How are we looking at this as an opportunity as we get out from the lockdown phase and this becomes the new normal? Thank you.
Yeah. So I will, like to inform you that if you read the Economic Times today, the government has announced that the testing is going to be ramped up. And right now, I think we've done about 2 lakh tests, and I think they want to do about something like 20 lakh tests, and they would like to do about 1 crore of tests by July end. This is written today. And in that, they expect to find 5 lakh to 7 lakh positivity, which means 5 to 7% positivity. The point I'm trying to make is that right now, there's no time absolutely for the antibody tests to come in right now because the peak of the epidemic has not been seen in India. So once this peak comes, then it will taper off, and at that point of time, the antibody tests will come in. Having said that, antibody, manufacturing companies are already approaching us. Some of them have even been approved. But what is most important is that the government has not given any private or for that matter even government company labs to go ahead and start doing the antibody testing because the antibody testing is not to be used for diagnosis. It is only for surveillance and finding out the immunity. And therefore, it is going to come in later from our point of view. Thank you.
Understood that. Okay, but we are keen on entering this opportunity, or you think that this will be too commoditized and therefore we would not want to get it? I just want to get a sense as to...
No, that is not the issue. The issue is that first of all, the science must be correct. Right now, the science is of finding out who has got this infection, and namely people who are around a positive case and the asymptomatic cases. So right now, the phase of the disease in India is different, and it is to find out if somebody is infected or not. For that, the test is the gold standard is RT-PCR. So once it tapers off, which is going to be, we can keep on speculating, but I think it may take another 2 months or so. After that, the antibody test will definitely kick in because people will have to find out whether they are immunized or not. And people who are not immunized, for example, will also be a good candidates for the vaccine trial or the vaccine when it is introduced. So the two phases are different. Yes, the opportunity will be there, but right now the opportunity for us, as I mentioned earlier, is in jumping onto the bandwagon of the government trying to do 1 crore tests by July. So that is the first opportunity.
So, Dr. Lal, if I may add, I think if your question is, as and when it opens up for private sector and we are allowed to do, obviously short answer is we would obviously participate in this opportunity as well. And second is RT-PCR test is highly specialized. Only few labs do this test. But once the antibody test comes in, then it will be widely available. It's much more scalable test because ELISA or whatever technology that gets approved is widely available with various labs.
Understood. Thank you. My second question, sir, is, have you seen any change in the reagent pricing because of, maybe significant ramp up globally for reagents itself? Has there been any such trend? Thank you.
For non-COVID profile of tests or?
For both, please.
I don't think there is any significant change that we've seen on either of them.
So the only thing which is dollar movement which is there, but right now we have not seen any increase, or we have not come across where suppliers are coming and saying the price is going up. So right now there is no such
Actually, I would say there is one adverse factor which is dollar movement, and one favorable because they also must be sitting on high inventories because the business is down. So I don't see that they will come back and put pressure on increasing prices.
Thank you so much.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Hi, thank you, and good evening, everyone. Can you update us on the movement of samples, both intracity and intercity? How is it looking at the moment?
Yeah, Bharat.
Yeah. So we had initial challenge during the first 3-4 days of lockdown, but glad to share with you that more than 90% of our intercity and intracity lines are completely operational now. The frequency gets better as flight connectivity starts to roll in. We have the Crescent route now being run by Blue Dart, which we are using to connect into Delhi or into Calcutta. But going forward, the rest of the main cities must be covered through airline, which will hopefully open up soon.
So just to add to what Bharat said, relatively we got more impacted by lack of patients because they were all locked down. While we were wondering logistics is actually hampered or not, but luckily our infrastructure and logistics movement were not that badly impacted as the patient movement, because patients were not there, mainly because there were no OPDs happening that time. But for the last 8-10 days now, OPDs have started opening up and we are seeing some encouraging trend in our non-COVID sales.
Okay, and just on that point of OPD, so these are doctors doing private consulting. So what's your assessment? I mean, is most of the doctors now operating 3 to 4 hours every day, or is it half of them? I guess that is what will determine your volume recovery.
Actually, I don't have any firm number, but the challenge which I find is that patients are hesitant to come out and still see doctors, even if there's a doctor there. So I think there is a lot of anxiety in patients right now, whether they want to move out and see a doctor or visit a hospital or a medical facility. I think till that stabilizes, one will have to wait for this normalization of business.
Okay, and so on COVID testing, what is your current capacity, daily capacity, or whichever way you want to put it? And earlier, I remember the reagents for COVID was the bottleneck. So how is that looking?
So our capacity for PCR testing is about 4,000 samples per day. And this is a total capacity because it also includes any business for non-COVID as well, because non-COVID has been very low. So most of this capacity we have been sharing with all the government bodies that if push comes to shove, we can actually go to 4,000 samples per day. So that's our stated capacity for PCR tests.
And do you have the reagent to do that test?
Yes. I think when these tests were approved, there was a lot of hue and cry and some of the media coverage about kit shortage. It was never meant to be like that because once the approval happened, obviously these people had to get import license, all that is behind us. So kit is not an issue anymore.
Okay,
if I may add very quickly, 4,000 is our stated capacity in the reference lab in Delhi, and the test is being carried out also in our Kolkata reference lab and also in our acquired lab in Indore. So the total capacity which we offer all over India for this COVID testing is between 5,000 to 6,000 tests per day.
Okay, great. Thanks. Sir, one final question, if I may. So how do you see the demand for COVID testing in the sense that are large employers like IT companies or private banks, thinking of making a mandatory COVID testing once a lockdown is lifted? So every employee who comes to office needs to do it, or airlines are thinking. Any conversations are going on in this direction?
Yes, we have actually recommended to the private industry and also to the ICMR that for large industrial units, for example, big automobile units, etc., who want to bring back their people for testing, we have suggested pool testing. And pool testing means that these people are all asymptomatic. They are raring to go and join work again. So five people, throat swabs will be put into one. And that is what has been already approved by the ICMR. But the difference is that they haven't given us the green signal yet. It is the pool testing they have only recommended in these clusters and red zone areas, not for the industrial workers so far. But hopefully it will come.
Okay, thanks. I'll join back the queue. Yeah.
Thank you.
Thank you. The next question is from the line of Neha Mansooriya from JP Morgan. Please go ahead.
Thank you for taking the question, sir. Sir, if I were to look at, recovery post-COVID, which segment in your view is likely to see recovery faster? Do you think it would be the B2C versus the B2B, given, it might take time for people to get comfortable to go back to hospitals?
Currently, what we are seeing is both recurring at similar paces, a percentage point here and there difference. The reason is sort of B2C traffic is also led by a hospital or a clinic operating. So both are currently seeing similar rates of recovery, including the hospital segment.
But what I see is that if our collection center is having walk-in, and more requests will come for home collections.
Understood. And if I were to look at, if let's assume March was zero, to what extent, has the recovery happened, now? And post, let's say in May, when you've seen some of the green zones open, what is the extent of recovery that you've seen in that green zone? Just to understand if that can be replicated, let's say, once a larger easing of lockdown happens.
So it's actually varying. Our business actually fell to the extent of 80-90% in the first week. Now, in some places, we have recovered to about 60% of our running rate. Some places 50, some places 70. Mm-hmm. And these numbers actually vary on day-to-day basis as well, because we are not able to actually fix up a trend, whether it is a sustainable trend or suddenly a pent-up demand that has suddenly opened up because there is a relaxation in one zone one day, and suddenly all that is over in next 2 to 3 days and then tends to fall down again. So it's a very uneven trend that we are seeing, but directionally I can say that trends are actually moving up. There's no doubt about that, and one does get a feeling that as the relaxation do take place, we will tend to come back to normalcy.
Okay, understood. And my last question is, what would we have this numbers to what extent of our volumes tend to be, seasonal tests? And I ask this because, we're going to see monsoons coming in, and usually, we do see increased volumes associated with, flu, etc. So, is there a risk that we see volumes being slower than last year as people are staying more indoors and, probably don't see a high rate of infection? So, if you could give us a ballpark number of, what extent of our volumes are seasonal tests.
So, I don't have this data readily available, but my broad guess is about 3 to 4% of our turnover generally is due to these spikes. And these spikes are mainly on account of fevers. And fever is mainly on account of dengue, chikungunya, and things like that, which are linked to monsoon, etc. And my sense is that it's very, very difficult to stay locked down if you have fever. So and I don't see that kind of dip happening just because there is a lockdown.
Understood. Thank you, sir.
Thank you. The next question is from the line of Prashant Nair from Citi. Please go ahead.
Hi. Good afternoon, everyone. So just one question. Wade, you mentioned some levers you have on the cost and the operational efficiency side. If you could just elaborate on, say, which broad heads could these be under, and what could be the quantum of cost reduction that you may be looking at under those heads?
So I'm not quantifying right now what will be the amount or quantum of the saving, but the broad areas I can tell you to.
Yeah, so I think let me take this question. Is it Prashant? You asked Prashant, right? Yeah. So I think one area is clearly rental. We are going back to our landlords and talking about slowdown, etc. So they do understand the situation. Many of them actually have come forward and offered some reduction. So that's one clear area. Second clear area is our A&P, where we had certain arrangement with some agencies, etc. We are relooking that. And we are also, because since there is no traffic movement, so naturally there is saving on account of lesser spend. So that's a second head. Third head is also overtime in our business. Naturally, if the business is down slow, and there is some saving coming on account of overtime. And fourth area is clearly a manpower, which is a very large spend for us. We are relooking at hiring, etc. And we are also looking at some ways and means of redeploying our resources. As this COVID is a new work, can we redeploy our people from non-COVID to COVID rather than hiring new set of people? And COVID is also a highly specialized job, so that's another way of redeploying resources from non-COVID to COVID. Travel, of course, for all of us is, including you guys, just come down to virtually zero, so that is another saving which will come. So I think while we do recognize there is a pressure on the top line, it might take time for it to come back to normal. And clearly, a lot of effort is going on saving costs and productivity, etc. Good news is that being in essential services, our employees have risen to the occasion, and they are actually working in all the labs. All our labs are open. Many, I think, collection centers to the extent of 70-80%. 70-80% of our collection center network is open. And for the last few weeks, even our corporate office, some of us, based on the guidelines in Gurgaon, we are all working from office. So I think we are trying our level best to keep our operations running within the guidelines of the government. And as and when the patient movement starts coming up, we are seeing improvement in sales as well. And having said that, focus on cost clearly is there to see if you can shave off some costs, especially in the next this quarter as well as next quarter.
Yeah, thanks. And just one follow-up question on that. Would you be able to give a rough, ballpark estimate of what part of your costs are absolutely fixed and, where, what part are reasonably variable with revenues or with volume of business?
Cost clearly is a raw material consumable cost that you see. Revenue share is a variable cost. Manpower is a bit of a semi-variable because there is a bit of a component of overtime and component of outsourcing of manpower, especially when the business goes up. The rest of it is pretty much fixed.
Except A&P.
A&P also is somewhat, we have a control there.
All right. Yeah, thanks. That's it for me. I'll come back in the queue if I have more.
Thanks. Sure.
Thank you. The next question is from the line of Hardik Shah from Pabuna Kilagar. Please go ahead.
Hi, sir. Thank you for taking my question. So my question is with respect to the COVID testing. Now that we are utilizing our time and resources for COVID testing, and also the impact on bottom line is negligible, if at all there is any, and sir, there is a possibility that it stays with us for an extended duration. Can you broadly comment that how does it impact our non-COVID business, if at all it turns to normalcy? Thank you.
So, I think COVID testing right now is only limited to one department, which is molecular diagnostics. And that department, if I am not mistaken, is about 5-6% of our total, 5-6% of our total business. So 95% of our business remains like biochemistry, hematology, microbiology, a lot of other departments. So they are not impacted by COVID at all. One of the departments will play a role once the antibody testing comes in. But as of now, the RT-PCR test is done only by one department. I think most of the manpower actually is consumed by data entry work, which is unfortunately is not related to technical stuff because a lot of these samples that have come have manual TRFs. But that side of life is also improving as this RT-PCR app has come in, as this whole automation that is taking place. My sense is once that also stabilizes, it will be a very, very small set of people who will work on this COVID business. So I don't think it is going to be such a big impact on the non-COVID because COVID business has come in.
Okay, sir. Just a small follow-up. Is there a possibility that this business turns profitable in the near term?
Actually, we don't know yet. When we started this, it actually was at cost basis because we didn't have any idea of these costs. We had to do some kind of standard costing. And industry position was that we'll try it at cost. As we have done now for the last 6 weeks, there are, in fact, a lot of unforeseen costs that have come in. Things like we have to do testing of our healthcare workers. A lot of people actually have been put in place to do data entry. We've also taken insurance for our people, whether it's related to health and life. That's another area that has come in. Yes, there is some advantage of a scale that falls in place. At the same time, as you mentioned that, some of you mentioned that most of the business is coming from hospitals or is coming from institutions. There you don't realize 4,500, it is much lower. So I really don't know whether what eventually, and then a lot of money is yet to be, it's in the form of receivables. So we don't even know what is going to be the carrying cost of this debtors on our books. So it's a little bit of a chaotic right now in terms of financially. It is obviously showing up some benefit in revenue, but I think it's very early for me to comment on the bottom line. But I think the sense that we get is that it's not going to be a very, very sort of making any meaningless impact on the bottom line.
Correct, sir. Thank you. That's all from my side.
Thank you. The next question is from the line of Shubhankar Roja from SKS Capital. Please go ahead.
Hi, thanks for the opportunity, sir. So, just one question. In terms of, are we doing this COVID testing? Are we doing home testing through normal online booking?
Yes, we do offer home collection in select cities.
But it has to adhere to guidelines by ICMR.
Okay, so that booking can be done online also?
Yes, you can book it online as well.
Okay. And can you just elaborate which all cities you're doing that right now?
Delhi NCR and some cities of UP and some cities of Punjab.
Okay, thank you so much.
Thank you. The next question is from the line of Manish Poddar from Nippon India. Please go ahead.
Yeah, hi sir. Thanks for operating during these tough times. So, just wanted to get an idea. So, you mentioned a lot about this, cost tailwinds which you have. So, would it be fair that the tailwinds will be able to offset the increase in the safety cost which you are incurring, and probably operating deleverage to some extent?
Yeah, so that's where I earlier told that though some of the costs are going up operationally because of some compliance or new way of working. At the same time, we are optimizing the cost, which in some sense will offset the additional cost which is coming on account of safety, compliance, and all that stuff.
But would it be a net positive, or I'm just trying to understand? So broadly, or would it be net neutral in it?
It depends actually what eventually happens, but I think on face of it, obviously looks like there is going to be increase in costs. We have to estimate that impact. I think if you were to ask me, will the cost of operation go up? Answer is yes. To what extent can we absorb it in our operations? We'll have to see as to how it is. Main cost of increase in operation is going to come out of use of masks and PPEs, because you will have to take precautions not only from any COVID test, but also from a non-COVID patient also. We'll have to make sure that our employees are taken care of. Even non-COVID patient also would want to make sure that they are equally safe. So I think on face of it, I do see that cost of operation will go up. We will probably estimate it as to how it is and figure it out and try and make sure that it doesn't impact our margins.
Okay. And one question on the medium term. So, do you envisage, let's say, given COVID, a lot of new labs have, and let's say new labs have come up and a lot of dormant labs have become active. So, do you envisage, let's say, competition to increase in the medium term?
For COVID, you mean?
No, generally for, let's say, earlier, the four players, the organized larger players and, the hospital labs, there were a lot of labs which are dormant or not running at that scale. And, government has also put up some labs in different cities now. So, do you envisage that competition will increase in the medium term post-COVID?
I actually find that the entire pathology lab space will undergo a huge change. And primarily, my personal view, I don't know whether it happens or not, I have a feeling that public-private interface will grow on information exchange. As public health will gain a lot of importance in times to come, and COVID is one such infectious communicable disease. There are many other diseases like swine flu, dengue, or any other disease, or even tuberculosis for that matter. I think information exchange between medical establishments from private side and government will actually go up significantly. And that interface is not a very easy to manage interface because it requires a lot of technology and it requires a lot of information which has to be in a very structured form. I do find that smaller labs may come under a lot of pressure rather than proliferating.
Okay. And just one question to Ved. The cash which we have on the books, is there any impact on, let's say, the recent, where is that invested? And, is there any impact of the recent, debt funds impact which was there?
No, fortunately not. So most of the investments are in FDs, and we have some amount invested in mutual fund. That too is not having any exposure into some of these companies which you are referring to. So we are not impacted to that.
Fine. Thank you so much, and all the best.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. For any further questions, you may come back for a follow-up. The next question is from the line of Sapna Jhavir from Dolat Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. So I wanted to understand, post-COVID, when we resume normalcy, how will the product mix or the business mix be? I mean, the recovery, as we understand, would be faster in B2B or B2C segment. How should we forecast that?
I'm sorry, I couldn't actually get your question. Can you repeat and also be a little louder?
Sure. Is this better?
Yeah.
I actually wanted to understand, post-COVID, once the business resumes, it starts to gain pace, how should our business mix look like in terms of B2B and B2C split?
Yeah. Bharat, you want to try?
Yeah. See, like I said, the recovery we are seeing is at very similar pace across both the segments, because both are, dependent on each other. That's not independent channel. B2B doesn't mean that it is completely independent. There is a flow of patients which happen. So I would actually expect both to go up in a similar fashion, and this time possibly the B2B segment going up a bit more faster up, given the pent-up, surgeries, etc., which will be conducted now.
So if I would take a shot at it, it's a good question. If I were to visualize, I have a feeling that let's say if I am a patient, I would actually hesitate to go to a crowded place. So I would rather go to an outlet where only few people go. Let's say, for example, ATM also, I would rather go to that ATM where only 1 or 2 people are going rather than an ATM where 20, 30 people are standing in the queue. So if I apply that formula, then I think our collection center network should do better, because normally throughput per collection center is not that high. And even there also, I would rather receive a lot of home collection requests, because within the vicinity, most people know me personally. I would rather serve them through home collection. So I think a lot of business is likely to go up through our franchisee network, is the sense that I have.
So in that case, franchisee network, I do understand that. Also, in terms of our hospital contracts or, contracts from this small and medium nursing homes, will that not be under pressure right now, or are we also renegotiating, those contracts?
No, that part of the business is IPD driven. So it depends. As their occupancy of beds goes up, our business also will tend to go up. So there is no direct patient interaction that happens in the hospital side of business. There you actually pick it up what their own lab would have gone and picked it up from IPD patients.
No, I mean, in terms of hospitals where there's no surgeries, only the sample collection that happens from the small and medium nursing homes. So there also, again, I'm assuming our contracts will be on a volume basis. So in times today, and probably, the recovery when it happens and maybe slow and gradual in way, will there be a pressure in terms of our contract, in terms of volume collection there?
We don't have volume-based pricing structure there. It's just a flat pricing that we agree with them. I think the only risk that we have in HLM is bit on receivables. I think that's the only area probably we need to be careful as their volumes dip. But otherwise, there's no change on the pricing terms as just because the volumes have fallen.
All right, sure, sir. Thank you so much.
Thank you. The next question is from the line of Samir Agarwal from IDFC. Please go ahead.
Hi, thanks for taking my question, sir. You mentioned a couple of times that you expect some customer behavior changes once the COVID normalization comes in post-COVID. You did allude to, customers facing or sort of preferring home collection versus visiting collection centers. Are there any other facets that sort of strike you which probably will change industry in a meaningful way?
The other trends that you mean?
Yeah, that customer behavior changes that you anticipate may happen in industry.
Yeah, one behavioral change I foresee is that a lot of people are reaching out to me asking me, is there any test that I can do to know whether I have immunity to fight these infections or not? So I think it finally boils down to your normal health status. So definitely it should have some positive rub-off on preventive health checkup. People would be much more health conscious, want to stay healthy. I think there is so much talk going around on comorbidity, which people know that if you are diabetic or you have a high blood pressure and things like that, you are at much higher risk. So people would want to manage their lifestyle better and manage some of these non-communicable diseases as well. So I do believe that overall preventive health checkup segment should do well.
And then secondly, on with just sort of a takeoff on that, if people essentially are becoming more health concerned, intuitively some bit of the infection-related diseases segment burden should come off. Is there a large proportion of our business or a meaningful proportion of our business which is kind of contingent on the infection outbreaks? Not specifically, not a seasonal one, but in general, is there a lot of infection-driven business for us?
We have a component of vector-borne diseases.
Yeah, I think that, of course, is very steady business that is very seasonal in nature. I'm not seeing such a large. See, the fact of the matter is we are such a large country. If you just look at numbers that we serve, it's very small. So I'm not sure whether some of these macro trends will have any impact. We have a long, long way to go because our market shares are so low. Even if you lose somewhere, you gain somewhere. Overall size of the opportunity is still very attractive for all of us.
Right. And then lastly, it's very early days, but whatever that is happening, do you see any impact on our sustainable EBITDA margin, the possibility for the business on a sustained basis? Does it positively, negatively impact it on a sustained basis? I mean, the whole whatever changes that we see in the landscape right now.
So clearly, our business is somewhat retail in nature. It has a high fixed cost infra, and it is extremely sensitive to any change in top line, both favorable and unfavorable. If you actually see this quarter results, while our top line is flat, but we have seen a sharp decline in EBITDA. So clearly, we will have to manage as a team next at least current quarter as well as maybe at the most next quarter to manage this decline in sales. So for these 2 quarters, I don't see that we can sustain these EBITDA margins in terms of percentage of turnover. But when we come back to our normal sales trajectory, I think we should be back to our normal EBITDA margins.
Okay, thank you.
Thank you. The next question is from the line of Anmol Ganju from JM Financial. Please go ahead.
Yeah, hi. My question is related to your comments that year on year we've seen just flat revenues and we've seen very sharp decline in EBITDA. But if you deconstruct the EBITDA miss, it has primarily come on the back of gross margins. What I understand the explanation is that this was on account of economies of scale getting disrupted for last 10-15 days. But then what would logically flow also is that as the recovery starts, our gross margin profile should revert, given the inventory and other reasons that you just read out, as not contributing to any meaningful escalation in reagent costs, etc. So any thoughts on that? Because if I look at deconstruct the margin part, I think gross margin is the only missing link. So
yeah, you're right. So there's sudden fall in gross margins and we have a high fixed cost structure that has impacted. Once that comes back, then we are back in the game.
Okay. That's helpful. And second is that, it's again emanating from your comments only. Do understand that even pre-COVID, given our dominant position in the NCR region, we were finding it hard to grow meaningfully faster than the market. A new dynamic, which you also highlighted, and I find fairly logical, that these smaller players should come under a lot more stress. Do you see there opportunity for us to grow meaningfully faster than the market And in that case, why would you pull back on some of the expenses like A&P, etc.? Because if at all, that should just drive our journey to consolidation and even a more fortified dominant position even stronger. So just wanted to know your thoughts. Why not look at FY21 just as an investment year where you can reinforce your position as a dominant player in most markets you've tried to get entry into the last 3-4 years?
No, sorry. If I conveyed, maybe let me correct myself. This pullback on A&P is not an annualized basis. This pullback of A&P is because since there are no patients, there's no point in spending. In fact, we have disproportionately increased our spend on communicating to our patients that our infrastructure is open, because we didn't want them to feel as if there is a lockdown and we are not working, because we are an essential service. So our infra is open. We spend disproportionate amount of money sending SMSs, telling them that we are open. So this pullback is natural because since there is no patient flow, some of the radio advertising, local stuff that we used to do, that is what we have stopped. But once the lockdown is lifted, we are back in action. So it's not that we want to actually pull back just to manage our EBITDA margin in the short term. So we are very clear. Our focus will remain medium to long term, while it's not that we want to have we don't want to sacrifice medium and long term just to manage our short term. We are very clear on that. So this pullback is not an annualized basis, just the last couple of months. So that's it.
Thank you for that. And my last question, if I may. The huge cash pile that we have becomes fairly interesting at this point in time, with more and more players coming under stress. Any thoughts, any exploratory thoughts about using this cash to strategically augment our as a financial player, as a dominant player in the space, more than what we already have?
So that goes without saying. We have always been open to doing these M&A opportunities. Yes, there is a thinking that many of these players would want to come forward and engage in these conversations. And we are hopeful that things should turn for good as far as the inorganic side of opportunity is concerned. And this cash should come handy for us.
Thank you so much. That's it from my side.
Thank you. The next question is from the line of Nitin Gosar from Invesco Asset Management. Please go ahead.
Hi, I have two questions. In this current environment, the whole system, including prescription writer to collection center to hospitals, all have been starved on businesses and they have been forced to absorb the fixed cost. The question is, how much time as a diagnostic company we have before the system becomes impatient, try to come back, renegotiate the whole incentivization program or commission structure. If the whole system doesn't seem coming back to normalcy by October, November, the idea is to understand, how impatient the system would be.
I think it's a question which is getting asked in different form and shape again and again as to how quickly we'll come back to normal. I do believe that as more and more relaxations start happening, is because it's not like a switch on and switch off. It's definitely going to be a gradual recovery. B, I do get sense in my bones that we will definitely recover because we are an essential services. It is not like airlines or travel, tourism or entertainment. It's a basic need. So we should come back to normal. We are also cognizant of the fact that opportunity may present itself in different form, either in terms of channel partners or walk-in versus home collection. Maybe test mix might change. Now, I think you are asking whether it will come in September, October. It's anybody's guess. As Dr. Lal mentioned, we are yet to see a peak on COVID side. So I think it will depend quite a bit on when do we get into that falling curve of COVID. I think it depends on that quite a bit. So,
sorry, sir. My question was more pertaining to the impatientness the ecosystem may show. Because everybody is out of cash, everybody is out of business, everybody has to absorb the fixed cost, and each one will try to push back each other in the whole ecosystem. So the idea is to understand, how much time we have in our hands before the system tries to squeeze out each other. Prescription writer, collection center, hospitals, all being part of the whole ecosystem.
Okay, so you mean, say, the pressure which we start feeling because hospitals are not doing well. Is that what you mean by that?
Yeah, hospitals are not doing well, or maybe collection centers are not having enough volumes to absorb their costs. Some of the doctor is not having enough business. So somebody is going to push the second guy, and second guy is going to push the third guy, and third guy will push the fourth.
Okay, I think it's a good question. So the pressure point that we will feel from each of these partners, let's say from hospital, one pressure point we might feel on receivables. So I think we'll have to be very, very careful on that receivables will stay within the limits, and we actually track credit limits carefully. I think that's one area for management team to keep an eye on that, because otherwise those guys might see us as funding their working capital. As far as the collection centers are concerned, their pressure could be because they earn through revenue share. Otherwise they don't earn. If their business is falling, their revenue share is going down. It's quite possible that they may actually just close down. So we'll have to keep looking at active collection centers in these times. And if that is what is happening, I'm sure it also must be happening to competition. If it's happening to competition, my logistics must make sure that I give a better service to that town, and that might actually just turn to a competitive advantage as well if I'm able to service that market better. So that's a collection center area. What else? On the walk-in piece, I think people may not want to come to lab immediately, but then I have to ramp up my home collection capacity to make sure that I cater to that segment as well. So I think each segment will require, will need to find out pain points and accordingly address it.
Got it.
Right now, I think the real issue we are facing is the receivable on the COVID side, because that business is coming from institutions, and we need to be careful on the receivables is one area which clearly we need to be careful.
Perfect. This was helpful. Second question is pertaining to, on collection efficiency, or probably the time that we get per day, around 2 to 3 hours to collect a sample, early morning slots. How do we spread it over, or how do we ensure we collect more sample in that limited time window in the environment where social distancing will become more normal, or sanitization norms will become much more stringent, wherein earlier person who comes up for blood sample will have to hygiene out their whole place and go for the second patient after a couple of minutes. Do you think the whole system will see a cost inflation?
So there are two things, on this count. One is that operationally we're trying to do a few things, which ensures that the space is used far more effectively. For example, we have asked people to book slots to come into our centers. We are also discouraging attendants from walking along with the main patient himself or herself. So we are able to manage the ambience inside. Second is like Om mentioned in his other question remarks, saying that people would prefer to go to a nearby center rather than travel a bit more distance to a main lab. So the franchisee collection center will see a faster growth. And third is people will like home collection more than coming even to a franchisee center. So the nature of business is likely to shift in some sense, and we are working towards enabling some of these shifts to happen as well, or enabling the patients to get their choice of channel readily available for them.
Got it, sir. This was helpful. Thank you.
It's also quite possible that our Saturday workload generally is very high. Most people now would want to come on a weekday rather than crowding on Saturday.
Right. Thank you.
Thank you. Ladies and gentlemen, we may request you to please limit your questions to 2 per participant. For any further questions, you may come back for a follow-up. The next question is from the line of Amit Kadam from Canara Robeco. Please go ahead.
Hi. Sir, I have one question. In recent time, only in last 10 days, we have seen lots of reverse migration happening in lots of urban cities. What could be its impact on our business, especially on the seasonal part, which is like dengue, malaria? if this guys does not come back in the next 2 months, how is going to impact our seasonal business?
That's on our segment.
Our segment is slightly more the lower middle class to the middle class and upper middle class. So the bottom of the pyramid really doesn't come to us. They go to the government institutions for their treatments. So we do not see any major impact on this migration or re-migration back.
Okay, that's it. And just like wanted a small clarification. So when Arvind sir said that when we are saying going to see a 1 crore for testing at pan India level, the percentage could actually touch 7 odd %. Am I right? Like they said 7%, and what could be the reason that it becoming like from 4 to 7%?
Yeah, no, Amit, I'm just quoting what government has said today. This is that it can reach between 5 lakhs to 7 lakhs. That's what the government is saying. And this is also internally actually asked about the migration. You know, when people are going, the migration people are going back to the villages, they have found that they suddenly, you find more positivity there. So I think that has to be, so that has been, it's not a fact of life, but you are likely to, because these people have been sticking together for a long time, and one person, as you know, can infect 400 people more in a matter of a month. So we see a spike coming up, and in the following 1 or 2 months, that's what the government is also saying. That's all.
I think, Dr. Lal, you are referring probably to an article that appeared today, right? That's what you are saying.
Yes. They're going to say, they have actually said that we are going to ramp up the COVID testing hell of a lot.
Okay. So, in short, this displacement of people which is happening, so that's not going to impact our business because that's not our target market as such.
No. We don't see that.
In fact, there is a possibility that we may, get some more COVID testing from these people. That opens up another opportunity for us.
Okay.
Yeah.
That's all, sir. Thank you.
Thanks.
Thank you. The next question is from the line of Ashish Thakkar from Motilal Oswal. Please go ahead.
Yeah, thanks for the opportunity. So in this quarter, we did around 2% patient volume growth. And considering that we already have a knowledge of how the April month has gone, would you like to put a number for the patient volume growth for FY21 for our business?
I think it's very difficult. It's a natural question to be asked by any one of us, including our team. I would not like to put any figure as of now. Maybe you'll have to give us some time. Maybe let's see how this quarter goes. Then we'll try and give some color on full year. Because right now there's no such trend that is emerging.
Okay, fair enough. Sir, on this COVID thing, so as we increase the number of tests per day, is there a possibility that the element of fixed cost absorption might just go up? In the sense that there could be more like operating leverage which could get unlocked?
I think it's not that significant right now. As I mentioned to you earlier that we looked at standard costing when we started this. We are seeing a lot of unforeseen costs now in the business. So my sense is that we may not get a significant leverage coming out of COVID testing.
Okay, fair enough. So the one clarification I would need, in the midst of your commentary, you said that you won't be able to sustain the EBITDA margins at least for the next 1 or 2 quarters. So were you benchmarking FY20 as the EBITDA margin or you were talking more specific about the quarter 4?
No. We are benchmarking FY20.
Okay, fair enough. Thanks, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Keshav Lahoti from Angel Broking. Please go ahead.
Hello. Sir, I can understand that the volumes dropped significantly in April and the May month. Can you please give me some ballpark number or range? What was the volume in April and the lockdown 3.0 for you?
We don't have these phases, but as I mentioned that when the lockdown happened, our business actually fell very sharply to the extent of 80%. But from then on, we have recovered very well. And the trends are very encouraging. But given that these trends are a little uneven in nature, so we are not able to put a figure. But definitely, there is significant improvement from what happened in the first week than what is happening in the last week. So we are clearly looking at non-COVID trends, because if I add COVID, then obviously life looks better. But COVID contribution is primarily on the top line, not to very large extent on the bottom line. And COVID also is very, very fluctuating. One day you have lots of sample, next day you have nothing. So that's why our focus primarily is getting back our non-COVID sales as much as possible. And our efforts are out there to open our lab network, to collection center network, and making sure that our service part is, we don't fall short on service. Our courier boys are reaching out to all the hospitals, and we believe that as OPDs and IPDs open up, our business will come back to normal very quickly.
Okay. So can you just answer me, as there was a notification from Supreme Court guiding government that the COVID test should be free of cost. Post that, whether anything has affected our COVID business, or was it normal? Nothing changed post that notification.
So that actually order got reversed by the Honorable Court. So that actually issue was there only for a few days. So we are working on ICMR approved rates.
Okay. And there is the expectation that ICMR might reduce the rate, as we are already like a no-profit business COVID is for us, right?
No, but there will be some sort of a discussion around this. So it depends on how it goes. So even ICMR also arrived at this figure after discussion with the industry in any case.
Okay. So my question was based on that, as the volumes are picking up in the industry, is it a possibility that rates might be renegotiated lower?
But when I say so, but there are a lot of other costs also are coming up as well, because there is a huge administrative cost which we never envisaged earlier. Because there's data keeping, data entry work which is happening. So, and as far as the scale is concerned, government rates are definitely much lower because of different kinds of format being serviced, whether the collection is done by the government, and we are only doing logistics and transport. So to that extent, economies of scale are already falling in place, and B2B rates are actually directionally going down.
Okay, sir. Understood. Thanks a lot.
Thank you. The next question is from the line of Pritesh Vora from Mission Holdings. Please go ahead.
Sir, what do you think is the market opportunity over a longer period of time? What do you think, so like the next 5 years or something, what kind of opportunity do you see as you expand geographically and other areas? One is the natural acquisition of the customer, and other is the geographical expansion. How do you see the opportunity pans out?
I think I put an extremely positive outlook on the long-term opportunity, and I'm very clear in my mind that with this crisis, general public will become much more aware about health. And if you look at some of the government announcements in the last few days, they have even gone to the extent of they want to develop labs at the block level related to infectious diseases. So my sense is that penetration levels of diagnostics will go up very sharply once we are out of this crisis. The overall outlook for next 5 years is quite positive on diagnostics.
Yeah, and if I may add, we have been actually concentrating that the non-communicable diseases, will catch up in India. But suddenly this dual burden of disease, communicable diseases, as we are seeing right now, is again reminding us that the infectious diseases there are also going to stay. So we will have a dual disease burden for which, we will have to be ready at all times.
So, sir, how do you put it? Would you take a market share in this environment? What is your ambition in geographical expansion? Will you go in the western areas, southern areas? What is the plan? One is the natural client acquired. Other is the geographical expansion.
So we have already outlined this strategy many times that we follow a clustered approach. given our market shares are still in single digit, so we want to
Cost is servicing cost. If I service the same patient, even if I am doing little extra tests, it is not hurting me. So that's where the margins is as compared to other tests is quite good.
And what about home collection?
So home collection is the highest revenue per patient because again in the whole segment the home collection is also on the gross margin basis is a high as compared to others.
There's always a chance to upsell in a home collection environment.
Om sir, one question here on the home collection is that most of the home collection is done by your franchisee or is done by the central labs in the place. Why I'm asking that question is that it has a huge impact on, let's say, for that test which is coming, what is the contribution to the EBITDA?
I think directionally we would want our franchisee to do home collection because one of the reasons the role a franchisee plays to bring scalability in our business. Because if I were to service first mile myself, then it's not a scalable idea. So we would want going forward a lot of home collections to be done by our franchisee. So we are actually making them tech-enabled so that they are able to service their customers better. So that's our directionally way forward. However, we also do home collections ourselves, which is directly done by the company. But that's more to actually just set up a model team so that that becomes a role model for our franchisee to emulate.
So directionally, when you said that home collections will increase, let's say in a new world, won't our margins come down because typically on franchisee business, our margins will be lower than the corporate average?
But he's also bearing a portion.
Yeah, he's also bearing all the costs as well.
Okay. So you don't think pressure on the margin if home collection picks up? Okay. Thank you.
It's not that significant, yeah.
Okay.
Thank you. The next question is from the line of Prakash Kapadia from Moneyvet Portfolio Managers. Please go ahead.
Yeah, I had two questions. Going forward for our non-COVID business, as home collection will drive volumes. What are we doing to prepare ourselves to gear up for this change trend maybe in the term? Are we going to outsource? Are we using technology and adding more plethos? You could give some color.
Yes, Prakash. So the short answer to that is there's a lot of tech investment happening to get a seamless home collection experience going. And on top of it, like Om mentioned some time back, more and more of franchisee will start to do home collection. So we will hold intellectual control of what is happening in the channel from a service delivery point of view, while the execution will be decentralized to the franchisee partners.
And as of now, these franchisees are part of the digital ecosystem. Or it's
they are getting into this world now.
Okay. And secondly, what is happening to smaller labs? They would, suffer more in these times. So any thoughts on faster consolidation?
Actually, I don't know. It's a little early, but my sense is that consolidation may just happen by shift of patient base itself. We may not actually need to go and ask for acquisition. I think patient comfort is now going to be with more a reputed brand rather than a small player is the sense that I get. So I think you'll have to give us a little bit of time to understand and do a dipstick in the market. Still the lockdown is on, so we are not able to get that. Maybe we'll commission research on this and find out what's really happening with the smaller labs. But definitely, we need to be aware about the new trend that is going to emerge with small labs. Give us a little bit of time and maybe let's just conduct some research on this and come back to you.
Sure. And last year, Doctor, you mentioned about always inorganic opportunity. So isn't it the right time to, use the gunpowder and, the cash which we have? Because, at these times only you get what you want in terms of any inorganic or the right kind of, company which you would want to acquire. So any thoughts on that?
Yeah, so those conversations hopefully should begin to right now. We are not able to move out itself.
Yeah.
So, but you are right. I think that goes without saying. Every crisis also throws up some opportunity, and for a fragmented nature of the industry, this is certainly that sort of a moment where consolidation wave should begin. I think there's no doubt about that.
Sure. Hopefully, once things open up post the lockdown, then I think we'll hear more things from you on that front. Thank you.
Right.
Thank you. The next question is from the line of Gagan Pareja from Kotak Alternatives. Please go ahead. Excuse me, this is the operator. Use your handset, please. We can't hear you at all. Excuse me, this is the operator. Mr. Pareja, may we request you to use your handset, please? We can't hear you.
We have a lockdown 4.0 planning meeting today.
Hello.
Yes, please.
Sir, my question was that would bundled tests have seen an outsized hit in the current environment, and would that have caused some impact on your EBITDA margins?
The bundled test took a very similar drop as the overall business, but our contributions are coming back in terms of the past numbers. So that will come back.
I think the drop that we saw was uniform all across, except probably home collections, right?
Yeah.
Yeah, that's what we noticed, that our home collection business fell relatively less, obviously because some people wanted home collection, but otherwise drop has been all across, uniform in nature.
Okay. And what could be the impact on your net working capital because of the pressures on receivables from both the COVID channel and also from the hospitals? What could be, going ahead, the new normal for net working capital?
So right now we are facing, you are rightly said that on account of receivable, everybody is facing the same problem. So our working capital is stuck. But as the lockdown is easing out, we are able to, recover this money. But right now we are, cash negative.
I think we should be in similar situation for next 2 to 3 months as well.
How much has been the increase in your receivable days, if you could give some idea there?
Days, because our sales are down, so days sales outstanding has gone up. But in absolute terms, I think we are somewhat there only. I think there is a COVID outstanding that has gone up sharply. But other places we have received some money. I think in absolute terms, the increase may not have been very high. Since sales are down, that's why days sales outstanding is more.
Okay. Also, you indicated that, there would now be an increased preference for home-based testing. Do you see e-pharmacies, who have both revenue streams, one in diagnostics and one in retail pharmacy practice? Do you see them becoming more aggressive on their diagnostic practice in terms of pricing, to build up a catchment base of patients who would be interested in the digital route?
So I do believe that they will play a much bigger role in collections part of the business. So they would become our partner on the collection side of it. But I do believe that consumers are going to prefer a brand for testing. So it is somewhat like both of us will have to actually work together with each other rather than compete with each other. So I get a sense that many of these e-commerce guys will play a very significant role for being our collection partners. Yes, you're right.
Okay, but you don't foresee them becoming competitors to you because some of them already have their own, albeit limited sort of practices, but they do have their diagnostic practices full out rather than just being collection centers.
Some of them have tried doing that, but given this this business is highly operational in nature. So if they want to do that, then it will be at the cost of scaling up their pharmacy side of business. So they will need to be very clear what they want to do, because if they get into doing end-to-end diagnostics, then I have a feeling they will struggle to scale up. They might just be better off doing the front-end part of it, is my sense. I may be wrong, but a couple of guys I have studied, they have struggled to scale a full-service model to multiple cities.
Even if they were to collaborate with you, would it mean that it has some sort of a difference in that business would have inherent difference in profitability or in cash flows compared to the traditional model?
You may be right, because obviously these guys, if they start owning the front-end customer, they would want to push back on us to get some extra share of margins. But that is some distance away, because they are not that significant player right now. Having said that, we also are investing a lot behind technology. Our preference would be that we be that player to serve our customer directly through home collection, online, etc., rather than depend on them. I rather use them in those markets like South and West where my presence is weaker. I don't mind sharing higher margins with them in those markets, because in any case, that's what I'm doing right now also. So I'll have to carefully use these people to suit my requirement. Right. But you are absolutely right. They may want to push back on us to get extra share of margin.
And your presentation also mentions something around starting up a radiology practice or building it out. If you could elaborate there, have I got it right that you are?
I don't think you mentioned anything like that in our presentation.
Okay. I might have been taking it wrong. Lastly, around the COVID thing, I think the CSIR lab in Delhi came out with a paper strip sputum-based testing format, which is not an antibody test, but which I think is in the same regime as the RT-PCR. And I think the NIV was supposed to give an approval. I don't know what the status is, but do you see that sort of thing scaling up? Because sputum-based testing seems to be more accurate, even if you were to look at papers coming outside from India as well, and also is more scalable and faster to implement.
Sorry, I'm not aware about this. If Dr. Lal is on the line, Dr. Lal is there?
I'll explain that. See, in the diagnostic phase, that when you want to catch the disease, the phase which I keep insisting that we are still in. So there, the best samples which you can get are the throat swabs and the oropharyngeal swabs. That's point number one. Point number two is that yes, the virus can be found in the saliva also, but saliva is not a very easy kind of a thing to obtain. And the third thing is the sputum. The sputum has to be produced. Sometimes instead of sputum, you might just get saliva. And saliva also is not the best of the samples in this disease. So I think we have to be slightly more, realistic and conservative. That world over, throat swabs and nasopharyngeal swabs is number one. When the disease goes down into the chest, you might get a productive sputum. Then there's no doubt about it, because if the whole infection has gone inside, then sputum is very good. So that, kind of a thing, what probably would be when the patient is admitted into the hospital and he's having these severe respiratory kind of, thing. So that is the way we look at it. And even, by the way, it's also found in the stools. So there are a whole lot of places it's been found in the semen. It's been found, practically everywhere. It's penetrated the blood-brain barrier, that kind of a thing. So this is a very dangerous kind of a virus which we are, looking at. I agree with you in principle, in theory, yes, sputum can be used, saliva can be used, but the best sample still is the two throat swabs.
Okay. But final question. You use PCR machines which might be of a specific make, maybe Roche or a Thermo Fisher or something of that sort. Does that therefore mean that the RT-PCR test kits also have to be from Roche? or from the same make as which you have the PCR machine, or maybe you could mix and match the test kits with different machines also.
See, the very high throughput machines, would be made by the same company. Very high. So you need 1,000 samples a day. Well, there's an automated Roche platform for that, but then you have to use only Roche kits. So that is the way the whole system behaves. What we are doing is that we are pretty much open to it. So we have used the MyLab kit, we have used Eltona, we've used something else. So these kits can be used freely. So and still we are able to give you 6,000 samples a day throughput. So we haven't done too badly.
Okay. So you can use the MyLab test kit with a PCR machine which might be of someone else's make.
Yes.
Okay.
Correct.
Yeah. Thank you. That's all from my side.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Thank you everyone for being with us on this call. Look forward to meet you on the next call. Till then, please stay safe and healthy. Thank you. I would now request the moderator to close the call, please.
Sure. Thank you very much, sir. Ladies and gentlemen, on behalf of Dr. Lal Pathlabs, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.